The session will begin in 5 minutes. We wish to inform everyone that this session will be recorded. Thank you. Welcome, everyone. Hi, I am Pau Pena. I'm a professional lecturer at the De La Salle University School of Economics, and I will be your MC for this opening session of the 59th Annual Meeting and Conference of the Philippine Economic Society. Thank you all very much for joining us today. This morning, we begin with the plenary sessions of the PES conference, delving on a timely and relevant theme, building back better, harnessing digitalization towards a transformed Philippines. Now, due to the public health crisis brought about a pandemic, this year's conference is being held online through Zoom and Facebook Live. While we are not able to convene physically, more economists and allied professionals are able to join us from around the world. The conference is also being held in conjunction with the Economic and Financial Literacy Week. Despite the pandemic, the PES is continuing its advocacy in promoting economic and financial literacy amongst its stakeholders, especially the private sector, as mandated by the Republic Act 10922 or the Economic and Financial Literacy Act. Before we formally begin, allow me to run through a few reminders and house rules for this session. First, we will be having an open forum towards the end of the webinar. For those joining us in Zoom, you may send your questions through the Q&A box or Q&A panel below. For those joining us through Facebook Live, you may send your questions through the comments section of the live stream. Second, kindly use the chat box and comment section sparingly to avoid disturbing the speakers and your fellow participants. Do not spam the chat box and comment section with messages that are unnecessary and irrelevant to our topic. The session will be recorded, and all recordings will be available through the official Facebook page of the PES. Fourth, towards the end of this session, a link to the session evaluation form will be opened. Only those who will accomplish the evaluation form for this session will be given an e-certificate for the session, whether you attended through Zoom or through Facebook Live. Let me also take this opportunity to acknowledge and thank our conference partners, our platinum sponsors, the De La Salle University School of Economics, the National Economic and Development Authority, and the Philippine Competition Commission. Our gold sponsors, the Aboitiz Power Corporation, the Bank of the Philippine Islands, the DOST Philippine Council for Agriculture, Aquatic and Natural Resources Research and Development, and the Friedrich Naumann Foundation for Freedom Philippines. And finally, our silver sponsors, the Ateneo Center for Economic Research and Development, the Bangko Sentral ng Pilipinas, and the Union Bank of the Philippines. A Q&A session with our first keynote speaker will follow immediately after his talk. May we request those joining us in Zoom to please send their questions through the Q&A box. For those joining us through Facebook Live, they may send their questions through the live stream comment section. Now, to formally open the conference, let us hear from the president of the Philippine Economic Society, who is also an economist at the Bangko Sentral ng Pilipinas, Dr. Faith Christian Q. Cacnio.
Thank you very much, Pao. Our esteemed keynote speakers, Dr. Benjamin Diokno, Governor of the Bangko Sentral ng Pilipinas and a former PES President, Dr. Dean Karlan, Distinguished Professor of Economics and Finance at the Northwestern University and President of Innovations for Poverty Action. Our distinguished panelists, Ms. Cecilia Borromeo, President and CEO, Land Bank of the Philippines, Dr. Eli Remolona, Professor of Finance and Director of Central Banking, Asia School of Business, Dr. Suleiman Coulibaly, Lead Economist and Program Leader for Brunei, Malaysia, Philippines, and Thailand of the World Bank, and Mr. Jose Emmanuel Hilado, Chief Financial Officer and Treasurer of the Union Bank of the Philippines. PS officers and members of the Board of Trustees, PS members, colleagues, friends, ladies and gentlemen, a pleasant day or evening to all of you. When the PES board started planning for the 59th annual meeting and conference, we easily arrived at a consensus on the conference theme. We want to focus on digitalization and how it can be harnessed to build better and more resilient economies in the post-pandemic era. Digitalization has increasingly become an integral aspect of our daily lives and of economies. During the great lockdown last year, digital technologies enabled governments and businesses to continue their operations amid community quarantines and restrictions on mobility. Such innovations also facilitated the shift to online learning by educational institutions and the adoption of alternative work arrangements in offices. Access to digital payment platforms and online banking facilities proved critical in ensuring that financial transactions continued to be carried out in the economy. Similarly, digital platforms acted as conduits for the prompt delivery of financial subsidies and support to sectors and households that were heavily affected by the global pandemic. Importantly, digital innovations allowed us to maintain our connection to family and friends while practicing physical distancing and adhering to health safety protocols. Digitalization has indeed become a key determinant of economic and social resilience. However, while digitalization holds promise in helping build stronger and resilient economies, we also must recognize that it could bring significant challenges. Instead of supporting inclusive growth, digitalization could lead to a divide between those with access and those without, thereby contributing to greater inequality. Digitalization could also contribute to what economist Joseph Schumpeter referred to as creative destruction, the process that continuously revolutionizes the economic structure from within, incessantly destroying the old one and incessantly creating a new one. These revolutionary changes could be beneficial for certain sectors of the economy, but they could adversely affect the others. These are some of the issues that we want to underscore in this conference. It is our hope that through the discussions, exchange of ideas, and interactions, we can bring about actionable policies and strategies to harness the potential of digitalization while minimizing its attendant risks. It is quite fitting that we are exploring digitalization and its possibilities in a conference that utilizes online platforms and digital technology. At this point, allow me to recognize the men and women whom I have the pleasure of working with at the PES, the officers and the members of the PES Board of Trustees. We have our Vice President, Dr. Charlotte Justine Diokno, our Secretary, Dr. Sarah Lynn Daway Ducanes, our Treasurer, Dr. Kevin Chua, and our board members, Mr. Ruben Carlo Asuncion, Dr. Agham Cuevas, Dr. Jogi Dacanay, Dr. Lawrence Dacoycuy, Dr. Rosemary Adilion, Dr. Maha Lea Ravago, Dr. Philip Arnold Tuanyo, Mr. Emilio Neri Jr., and Dr. Joseph Capuno. We also have our regional representatives, Dr. Gladys Navarro for Luzon, Dr. Alice Joan Ferrer for Visayas, and Dr. Catherine Rowin Almaden for Mindanao. As the PES draws near to its 60 years of existence, we look back to our humble beginnings when in August 1962, the PES was founded through the efforts of a group of young social scientists and business graduates who had just received their degrees from various universities abroad. Today, we honor one of our founders, Dr. Sixto Rojas, for his many contributions to national development and nation building. Dr. Rojas has actively engaged in corporate management, taking on various roles as Executive Vice President of a Philippine petroleum company, Chief Economic Planner for the Philippine government, Chief Executive of an investment banking group in the Philippines and other countries of Southeast Asia. Dr. Rojas was also the first Filipino president of the Asian Institute of Management, and he served as vice chairman of the American Express Bank in New York and chairman of the Amex Bank in London. Over the past 30 years, Dr. Rojas has been active in managing and establishing various not-for-profit foundations. He is engaged in developing ecosystems-based, community-centered organization and management system under which enterprise stockholder interest is rendered secondary to community stakeholder wealth and welfare. Dr. Rojas is the chairman of the Maximo T. Calao Institute for Sustainable Development. On behalf of the PES officers and Board of Trustees, let me express our sincerest gratitude to our distinguished keynote speakers, our panelists, moderators, session organizers, and paper presenters for sharing their expertise and valuable time. We also would like to thank our conference partners who generously provided financial support for this conference. To our dear PES members and audience, thank you for being part of the 59th PES annual meeting and conference. Mabuhay ang PES, mabuhay ang Pilipinas. Thank you.
Thank you, Dr. Cacnio. Without further ado, let me now introduce our first keynote speaker for this morning. Dr. Benjamin E. Diokno is the current governor of the Bangko Sentral ng Pilipinas. Prior to his appointment, he served as budget secretary from 2016 to 2019. On his third tour of duty at the Department of Budget and Management, he pursued an expansionary fiscal policy to finance investments in human capital development and public infrastructure. As BSP governor, he is not only pursuing the BSP mandates of price stability, financial stability, and an efficient payments and settlement system, but also endeavors to bring central banking closer to the people. One of his primary thrusts is to champion digital payments and aims to shift 50% of retail payment transactions to digital ones by the end of his term. His policy expertise and research contribution extend to various areas of public economics, such as the structure and scope of government, tax policies and reforms, public expenditure management analysis, fiscal decentralization, national budget, and public debt, among other topics. He is Professor Emeritus of the University of the Philippines in Diliman, where he taught public sector economics, microeconomics, macroeconomics, development economics, and special topics such as public enterprises, investment and pricing policies, public sector reforms, local government finance, among others. He was also the chairman of the Board of Trustees of the Pamantasan ng Lungsod ng Maynila. He also served as fiscal advisor to the Philippine Senate, chairman and CEO of the Philippine National Oil Company, and chairman of the Local Water Utilities Administration. He served as an advisor and consultant to various multilateral agencies like the World Bank, the Asian Development Bank, European Commission, and USAID for work in the Philippines, China, and transitioning economies like Vietnam, Cambodia, and Mongolia. Ladies and gentlemen, our first keynote speaker, Governor Benjamin Diokno of the Bangko Sentral ng Pilipinas.
Okay, thank you. Good morning, everyone. It is my pleasure to be with you today and discuss what the BSP is doing in spearheading efforts towards greater digitalization in the country. More than a year since the onset of the COVID-19 pandemic, the Philippine economy is gradually recovering. The government's mass vaccination program is picking up its pace and scope and is expected to accelerate further. In 2020, the government passed the Bayanihan 1 and 2 laws. The government also passed into law reforms that could foster a strong and faster economic rebound while limiting the scarring effects of the pandemic on the economy. This includes the passage of the Financial Institutions Strategic Transfer, or FIST Act, and the Corporate Recovery and Tax Incentives for Enterprises, or CREATE Act. Meanwhile, the proposed Government Financial Institutions Unified Initiatives to Distressed Enterprises for Economic Recovery, or GUIDE Bill, aims to strengthen the capacity of government financial institutions to assist micro, small, and medium enterprises to cope with the effects of COVID-19. The BSP supported the national government through some policy interventions. First were measures to boost market confidence on the availability of low-cost credit resources, such as cuts in policy rate and the reserve requirement. The lower policy rate was meant to influence banks to cut their own lending rates, thereby promoting credit-taking activities. Meanwhile, lower reserve requirement increased the volume of loanable funds. Second were extraordinary liquidity measures to the national government to help fund the pandemic response measures. These include provisional advances to the national government, purchases of government securities in the secondary market, and remittances of advanced dividends to the national government. Third were regulatory and operational relief measures to maintain stability of the financial system and ensure public access to financial services. We counted loans to micro, small, and medium enterprises as compliance to the reserve requirement, increased the single borrower's limit, and raised the ceiling for real estate loans. While we continue efforts against COVID-19, recent numbers on economic activity show some signs of recovery. After 5 quarters of economic contractions, the country's real GDP grew by 12% in the second quarter of 2021. This positive growth continued in the following quarter with 7.1%, despite the reimposition of stricter quarantine measures in August and September. In September 2021, however, the country's unemployment rate increased further to 8.9% from 8.1% in the previous month. This result is expected given the extension of strict quarantine measures during the month. What is notable here, however, is that some of the jobs lost since the start of the pandemic last year have been gradually recovered, with the employment level in September still higher than the pre-pandemic level. The country's headline inflation slowed down to 4.6% year-on-year in October from 4.8% in the previous month. The resulting year-to-date average inflation rate of 4.5% remains above the government's annual inflation target of 3%, plus or minus 1 percentage point for the year. Meanwhile, the country's external sector remains manageable. The sustained rebound in key economies has spurred external demand. The country's exports and imports of goods increased by 21.3% and 31.6% respectively. The latter is on stronger domestic demand for raw materials, intermediate goods, and capital goods. Cash remittances from overseas Filipino workers are also strengthening, with 5.7% growth in January to August 2021, from a 2.6% contraction in the same period in 2020. Meanwhile, BPO services in the first half of 2021 remain strong, despite the disruption to business activities around the world. Net foreign direct investments for the first 7 months of this year increased due to positive foreign investor sentiment on the country's macroeconomic fundamentals and strong growth prospects. The country's outstanding external debt also remains at a prudent level, as its ratio to GDP slightly eased to 26.5% in end June 2021. In the previous slides, I discussed the macro level indicators showing how our economy has started to show signs of recovery. But it's also good to look at consumer statistics. As you know, there has been a shift to the digital space because of the pandemic. This includes payments. In fact, the digitalization of payments has been beneficial, and for many, an imperative, as consumers, businesses, and the government all needed to find suitable alternatives to cash payments and face-to-face transactions at a time when people cannot go out of their homes to avoid exposure to the COVID-19. In 2020, the data shows that 20.1% of payments is done digitally. This level is remarkable if we consider that just 7 years ago, the digital payment share was only 1%. The digital shift is also evident in the rise of e-wallet transactions. More digitally engaged Filipinos have opened e-money accounts, as shown by the 125% increase in the number of registered e-money accounts, which were used to make various transactions, thus substantially growing e-money transactions by close to 200% from 2019 to 2020. Touch points enabling convenient access to financial services expanded to over 58,000 cash agents and over 84,000 e-money agents nationwide as of the fourth quarter of 2020. This also translates to 91% of local government units with access to agent banking services. Ubiquitous and situated in local communities, agents enable financial institutions to serve a wider client base, particularly in low-income and rural areas, at greater efficiency, but at less cost. The low-cost, no-frill basic deposit account, or BDA, also showed remarkable increases during the pandemic. From 4 million accounts in 2019, the number of BDAs opened has reached 7.4 million accounts, amounting to 4.9 billion pesos, offered by 137 banks as of the second quarter of this year. It is estimated that around 19 million new accounts were opened from 2019 to 2020 based on the increase in BDA and e-money accounts. We also noticed a substantial shift towards the use of interoperable digital payment rails of PesoNet and InstaPay. With a stable trend of checks for the period, the PesoNet volume may approach check payments over time. Meanwhile, we can readily see that the volume of InstaPay has already overtaken that of ATM cash withdrawals. These observations are indicative of the growing familiarity of more financial consumers with a safe, convenient, and affordable digital payment rails of PesoNet and InstaPay. The benefits of digitalization became more apparent in the face of the COVID-19 pandemic. Today, transacting digitally becomes more meaningful, especially when it serves the greater purpose of helping each other to rise above the challenges posed by we currently face. The Department of Social Welfare and Development, in partnership with different financial service providers, implemented an account-based distribution of the Social Amelioration Program for its second tranche. This approach did not only hasten the distribution process, but also provided convenience to beneficiaries through the provision of transaction accounts. Another example by which digitalization supported the government's delivery of aid and help the countrymen was in the efficient distribution of the small business wage subsidy. This program is a joint undertaking of the Department of Finance, Social Security System, and the Bureau of Internal Revenue that provided financial support to 3.4 million employees of 1.5 million small businesses nationwide. At a time when beneficiaries most needed financial support, but are unable to go out without risking exposure to COVID-19, PesoNet proved to be useful in bringing these benefits to the recipients despite the limitations brought about by the pandemic. Another collaboration of the BSP is with the Department of Labor and Employment for the promotion of the digital and account-based disbursement of salaries through the payment of wages to transaction accounts. The ownership of accounts by workers will pave the way for the creation of a rich digital footprint that can be used to develop fit-for-purpose digital financial services responsive to the needs of this market segment. Indeed, digitalization has become a must, not only because of the pandemic. We also see it to be an enabler of an inclusive financial system and a means to financial inclusion. To this end, the BSP developed in 2020 the 3-year Digital Payments Transformation Roadmap. The roadmap aims to accomplish 2 strategic goals by the year 2023. First is the strengthened customer preference for digital payments with the goal of converting at least 50% of the total volume of retail payments into digital flow. The second is to onboard at least 70% of Filipino adults to the financial system through the opening of a transaction account which may be used for payments. This outcome will be achieved with the availability of more innovative and responsive digital financial products and services. Over time, the increased usage of transaction accounts will enable Filipinos to build financial profiles with their payment service providers, including banks and non-bank e-money issuers. Clearly, the BSP's thrust to promote the digitalization of payments is mutually reinforcing its financial inclusion agenda, as payments is the most basic and most used financial service by Filipinos. The roadmap objectives will strategically be accomplished under 3 critical pillars. First is the development of digital payment streams to make digital payments affordable, more convenient, and responsive to the diverse needs of consumers. Second is the enhancement of the digital finance infrastructure to support the expanded use of digital financial services and ease the onboarding requirements and costs to enable more Filipinos to meaningfully participate in the digital finance ecosystem. Third is the formulation of enabling policies, data governance standards to uphold the integrity and security of customer information and financial data. On the first pillar, the share of digital payments to total monthly retail payments in the country continue to rise. One of the major contributors in the growth of digital payments is the payment to merchants, or P2M, which belongs to the P2B, or payments to businesses, use case. These are the payments for goods and services we conduct every day, including e-commerce. Given that P2B payments and business to business, or B2B payments, comprise a big portion of the total monthly retail payments in the country, the initiatives being undertaken by the BSP together with the payments industry, led by the Philippine Payments Management, Inc., are geared towards digitalizing payments in the said use cases. This strategy is aligned with the evidence-based approach of the BSP in developing policy interventions and prioritization of initiatives. Building on the interoperable fund transfer rails of PESONet and InstaPay, initiatives are underway to expand the payment products and services that could be offered to persons and businesses to address their varying payment needs. Utilizing the PESONet rail, the PESONet multiple VAT settlements will support P2B payments with faster clearing and settlement of PESONet transfers, allowing funds to be received earlier than end of banking day. Direct debit can facilitate more efficient settlement of recurring payments to billers. Together, these two initiatives can facilitate P2B payments such as loan amortization and lease rentals, B2B payments such as supplier payments and payments made by individuals, businesses, and the government or other government institutions. Meanwhile, bills pay and requests to pay are forthcoming digital payment streams that will run on the InstaPay rail to make P2B and B2B payments such as payments for goods, services, bills, and utilities more convenient. These facilities can be used by consumers even if the transaction accounts of the customers and merchant billers are maintained in different payment service providers. The Bureau of Internal Revenue is set to pilot its electronic official receipt and e-invoicing system next year, which aims to facilitate tax administration and ease transactions for taxpayers. Now, on the second pillar, we highlight the continuous enhancement of digital finance infrastructures that are essential to sustain the expansion of the scope, scale, and reach of digital financial services. The BSP recognizes that one of the barriers to ownership of formal accounts is the lack of proper identification requirements. This is why the National ID, or the PhilSys ID, is considered a key inclusion enabler as it addresses the oft-cited challenge of proper identification, thus reducing customer onboarding costs. Through the partnership of the Philippine Statistics Authority and the Land Bank of the Philippines, 5.9 million bank accounts have been opened as of November 5th by the PhilSys registrants, who completed the Step 2 biometric capture process. Coupled with the Basic Deposit Account initiative, we believe that the rollout of PhilSys ID could bolster financial inclusion among Filipinos across social classes. For digital finance to flourish, effective and reliable internet connectivity is a necessary condition. The BSP strongly supports the forthcoming information and communications technology policy reform, including the Bill on Open Access in Data Transmission Act and Executive Order number 127 on expanding the provision of internet services through inclusive access to satellite services. The Bill on Open Access in Data Transmission Act aims to modernize the country's telecom by removing the requirement of obtaining congressional franchise and streamlining the registration process, thereby opening up the broadband industry to more players and attract much needed investment in data transmission infrastructure. Executive Order number 127 on expanding the provision of internet services through the inclusive access to satellite services amends Executive Order number 467 issued in 1998, which aims to liberalize access to satellites for internet connectivity. This policy will help address digital infrastructure gap in the countryside. Currently, only telecom companies with congressional franchises can provide satellite technology services. Alongside these prospective developments, digital solutions are being pursued to enable e-payments, even without internet connection, or what we call offline e-payments. This initiative is being explored as a potential solution for improved financial access, particularly in hard-to-reach rural areas. Finally, on the third pillar, the BSP fosters an enabling policy environment for financial system players to pursue the development of innovative financial products and services that cater to the needs of Filipinos without compromising financial stability, cybersecurity, data integrity, and consumer protection. By balancing innovation openness with the pursuit of safeguarding consumer protection, cybersecurity, and financial stability, the BSP aims to develop the public's trust in the financial system, thereby promoting financial inclusion, narrowing the social and economic gaps among Filipinos, and paving the way for an inclusive economic recovery. First is the digital banking framework. Digital banks are viewed by the BSP, by the financial services industry, as game changers in promoting market efficiencies and expanding access of Filipinos to a broad range of financial services. The BSP's regulatory framework for digital banks is designed to encourage responsible innovation and promote a level playing field by allowing new players, including fintech firms, to establish a digital bank while ensuring that new risks are effectively managed. Second is the open finance framework. Responsible use and sharing of customer data under the framework will facilitate the development of customer-centric products and services that are tailored to serve the needs of end users. The framework likewise reinforces that BSP's policy agenda of safeguarding customer data protection and confidentiality, since the framework promotes consent-driven data portability, interoperability, and collaborative partnerships among entities who adhere to the same standards of data security and privacy. Third is the guidelines on virtual asset service providers, or VAS. In response to the emergence of virtual assets in the financial system, the BSP has established regulatory amendments to these guidelines, which incorporate global risk management standards that are aligned with those prescribed by the Financial Action Task Force on Money Laundering for virtual assets and VASP. The BSP Sandbox, or Test and Learn approach, is a collaborative undertaking between regulators and industry players, which can either be fintech newcomers or incumbent financial institutions. This approach enables the BSP to ensure that financial innovations will be prudently scrutinized prior to actual deployment or live production. In order to safeguard information security and data privacy, the BSP has been continuously developing relevant cybersecurity policies that require BSFIs to adopt robust technology risk management systems and effective cybersecurity resilience measures to ensure the confidentiality and integrity of customer information. Equal priority is also given to financial education and consumer protection, which are instrumental in advancing responsible innovation and strong market conduct. Our initiatives in this space are as follows. First, digital literacy program. The digital literacy program was launched in 2020 to increase public trust and confidence in the digital financial ecosystem and encourage the use of digital financial services. Next is the Financial Consumer Protection Bill. The BSP supports this bill's passage, which aims to fortify the rules and regulations protecting financial consumers. House Bill number 6768 was already approved by the House of Representatives in third and final reading in June 2020. Next is the Facilitated Complaints Resolution through our chatbot called BOB, short for the BSP online body. BOB provides financial consumers a more accessible channel for raising their concerns. BOB may be accessed through the BSP website and Facebook page. While considered critical drivers of growth and recovery, the agriculture and the MSME sectors continue to face challenges. Foremost among them is access to credit. Many businesses, especially microenterprises, contend with the lack of adequate collateral, credit history, and documentary requirements, as well as industry perceptions of high risk, low return lending. Survey results following the initial lockdowns reported over 60% of our MSMEs stopped operations and registered zero sales due to the lack of working capital and means to avail relief support. Thus, the BSP has set out programs envisioned to encourage credit flow toward these critical sectors and boost their overall development competitiveness over the long term. This includes Credit Risk Database Project. The Credit Risk Database Project implementation team, comprised of the BSP's CRD Project Implementation Unit and a team of experts from CRD Japan, started a data collection in December 2020 and is to be completed in December 2021. This will then prompt the start of the credit scoring model development in the same month. 3 additional universal and commercial banks recently joined this project, increasing the number of pioneer participating banks from 17 to 20, while the development of a concrete framework for CRD sustainable operation is likewise underway. Next is the Credit Surety Fund Program. The Credit Surety Fund Program is a credit enhancement scheme providing maximum 80% surety cover for loans granted by banks to MSMEs, typically experiencing difficulties in accessing credit facilities, and to further address the challenge of borrowing costs. The BSP is engaging the Philippine Guarantee Corporation to develop a subsidy program for the CSF and the Land Bank on the commercial rate imposed on CSF covered loans. This led to the Land Bank's commitment to reduce the interest rate on CSF covered loans to 5%. Next is the Agri-Agri Law Amendments. Amendments to the implementing rules and regulations of Republic Act number 10,000 for the Agri-Agri Credit Act of 2009 allows banks to lend to more types of farming communities, such as households of the agrarian reform beneficiary and to agrarian reform communities, and classify more loans as compliant with the law's quotas, which strengthen rural development by providing a holistic approach in addressing the financing needs of the broader agricultural financing ecosystem. Next is the standardization of business loan application form. This initiative aims to make the loan application process simpler and borrower-friendly, particularly for small businesses. This will be subject to pilot adoption by voluntary participating banks within the second half of 2021, while the adoption of SBLF documents by banking industry associations is targeted by the second quarter of 2022. Next is the Agriculture Value Chain Financing, or AVCF pilot project. This pilot project aims to promote agriculture value chain financing as a viable financing method and effectively boost lending to the agriculture sector. One of the project's target outcomes is the creation of a manual for banks that they can use to engage in AVCF. The project is conducted in collaboration with the Asian Development Bank, which provided technical guidance such as mapping analysis and packaging of loan facility proposals, and discussions with the Agriculture Credit Policy Council, or ACPC, on available lending facilities for identified actors in the value chains are underway. Next is the Supply Chain Finance Market Development Study. This study is an innovative financing approach banks can use to meet financing needs of smaller firms based on their supply chain relationships with more established corporate clients. The BSP is supporting the conduct of the SCF market development study aimed at identifying gaps and recommendations to promote SCF in the Philippines. Demand-side survey for MSMEs. The development of a demand-side survey for MSMEs aimed to generate new insights on MSME access to finance and the impact of COVID-19. The survey results can support evidence-based policymaking to help financial service providers expand products and services in the market. Finally, microfinance support. Microfinance is an important source of credit of the entrepreneurial poor who are unable to borrow from traditional banks due to lack of collateral, inadequate business documents, and other constraints. It has become a viable alternative to 5/6 lending in serving the financing needs of low-income Filipinos. There are now 149 banks serving almost 2 million borrowers, with total microfinance loan portfolio of 25 billion as of the third quarter of 2020. Rest assured, the BSP is committed to provide the enabling regulatory environment, ensuring the provision of a safe, efficient, and reliable digital finance ecosystem that allows the unhampered delivery of responsive digital financial services. We will continue to do our best to perform our catalytic role in providing the necessary support to all economic players. We hope that you can actively help us shape this narrative into something that is safe, sustainable, inclusive, and rewarding for all stakeholders. Thank you for your attention, and I look forward to the Q&A part of the session.
Thank you, Governor Diokno. Let us now proceed to the open forum so that our participants can join our discussion. For those joining us in Zoom, you may send your questions through the Q&A box. And for those joining us through Facebook Live, you may send your questions through the comment section. I'll do the first question, Governor. Governor Diokno, really impressive and comprehensive set of reforms, paving the way towards a digitally transformed payment system in the Philippines. And a lot of your efforts are laudable, especially in empowering a lot of our sectors to go digital. Well, I am part of a project that that interviewed a lot of entrepreneurs in micro, small, and medium enterprises, businesses, including agricultural cooperatives. Amongst the agri cooperatives, there was a strong intention to go digital, but as you mentioned, and they verify, structural barriers exist for them, including the limited access to internet or even the lack of fundamental devices and ways to access digital payments. What we also learned is that there is the coupling of financial and digital literacy. There is no financial literacy without digital literacy. So, Governor, my question is this: how optimistic are you in actually meeting the 2020 to 2023 roadmap, given the Herculean efforts that need to be in place to really bring a lot of our sectors into a digitally transformed financial ecosystem?
Well, thank you for that question. As you know, we launched this roadmap even before the crisis, right? And our goal is very clear, that we want to shift from a cash-heavy to a cash-light society. And that our goal, first of all, is to transform the retail transactions, or all 50%, at least 50% of retail payments from cash into digital form. And that we want to increase the number of Filipino adults with the transaction account. That was before the crisis, and I think the crisis has helped us in our effort. The latest number that we've seen is that as of the end of 2020, 1/5 or 20% of all transactions now are in digital form. And in fact, there has been a sustained uptrend in digital payments through our PesoNet and InstaPay. For example, combined on a year-on-year basis, the combined volume of PesoNet and InstaPay has increased, or rather has reached 370, or close to 400 million transactions, amounting to 5.1 trillion, more than twice the volume and almost double the value reported for the same 9-month period in 2020. So that's the trajectory, upward trajectory. And we continue to come up with other use cases. Now, on the how are we going to achieve that? I think we just launched the P2M, person to merchant QR code, standardized QR code. This will now go into public markets, tricycles, jeepneys, etc., and also sari-sari stores. So that will, I think, help us achieve our goal by the end of my term, which is 2023. I'm very confident that we will reach that goal even earlier than the date that I stated.
Thank you, Governor. Now let me go to some of the questions dropped through the Q&A box. from Miss Angelica Torres. Many MSMEs and farmers are still off-grid, though digitalization has served as a useful recovery strategy. Can you please provide more details on offline e-payments initiative that you mentioned in your presentation earlier?
Yeah, that's the one I mentioned, the QRPH. We have adopted a common QR for the entire country, and by the way, we are going to make this cross-border interoperable also, and we just expanded our memorandum of understanding with Singapore, so we can make use of the QR the digital payment system in Singapore, and this will be a big help for our overseas Filipino workers. And we are at this time also at work in the process of making an interoperable and cross-border payment system among Asian countries. That's in the works. Now, I'm very optimistic with the QRPH adoption. That will not require a lot of the internet that you need for more sophisticated transactions. What is needed here are more participants, more banks, rural banks especially, and in the countryside, and also more merchants to join the QRPH movement. So that, for example, this could be very helpful if you have a small shop in public markets, or you have a small size store, or you're a small entrepreneur, you're a household, and you want to do some digital payments. That's possible. Plus, but we are addressing that internet problem. In fact, we asked the president to sign an executive order expanding the provision of internet services through inclusive access to satellite services. That's very important, and we're glad that the Department of the DICT has issued the guidelines or the implementing rules and regulations for that. So that will broaden the internet network, broadband services network in the entire country.
Thank you, Governor. I think we have room for at least two more questions if your schedule still allows, sir. My next question would be something that's reflecting about what we learned from 2020 and going forward, going back to our theme of building back better. 2020 saw the use of non-conventional or unconventional, non-traditional policies, both monetary and fiscal policies, to support economies whilst it was in a great pause, or whilst it was on hold. In building back better, and given the learnings from the past year, what would you consider to be something that we can continue in terms of unconventional monetary and fiscal policies in the new normal?
Well, to me, we're lucky that before pandemic hit us, the Central Bank Act was revised, and it provided there is a provision in that new law which would allow the national government to provide extraordinary measures, to adopt extraordinary measures to help the government in such extraordinary times. And that provision was used for the first time. And that's why we were able to extend to the national government some 540 billion advance, no interest. Okay, that's unprecedented. But that is provided by law. In extraordinary times, we can do that. You know the impact of that on the national government. Coming from the national government myself, and being a fiscal guy myself, I know how difficult that was for the Philippines, for the Philippine government. Because of the crisis, revenues was down, right? Significantly down. At the same time, the expenditure demands are high because you have to raise money for the vaccine, you have to beef up the health infrastructure and so forth. And so the government was really in a big problem. And so that extraordinary help from the national government, 540 billion interest-free advance to the national government, that made a lot of difference. Okay? That's not supposed to be that's supposed to be done only extraordinary times, and these are extraordinary times. So that's one thing that was good for us. In addition, I think the very close coordination between the fiscal and monetary authorities, I think you'll agree, has kept the Philippines in a very good position. In fact, I think even the rating agencies will agree that the macroeconomic fundamentals remain sound for the Philippines in a wave of downgrades all over the place. The rating agencies have affirmed for investment rating for the Philippines, and that's because of the very close coordination between the fiscal and monetary authorities.
Thank you, the Governor Diokno. We have one last question, and this is very much intersecting with our theme for this conference. What do you think is the role of the BSP in decentralized finance, particularly in the use of blockchain technology for digital trade of tokenized commodities, such as farmers' produce? This question cites some cases that are currently already happening in other countries.
Yeah, we support that because it will make services more efficient, less costly, and it will broaden the reach of financial services. So we support that. That the blockchain technology is a tool, right? So it will. And in fact, I know it's been adopted by even some rural banks. And so we support innovation, but as I said in my presentation, we have to make sure that it does not become a tool for theft. We have also to be concerned with money laundering, for example, and consumer protection. So we have to balance, right? But we welcome any innovation that will make the system more efficient, less costly, and sustainable.
Governor, maybe I will ask for some of my students who want me to ask this question. What would be the BSPs? And this will be the final question, and this caters to the students who are attending through Facebook Live. What is the BSP's position with the rise in interest and demand for Bitcoin trading in the Philippines? And I also suppose that many of my students are heavily engaged in Bitcoin. What would be your advice to them as they explore this field? I think Governor Diokno went offline. Is Governor Diokno in the room? All right. The governor might be experiencing some technical difficulties. And with that, okay. All right. With that, again, on behalf of the Philippine Economic Society, we thank you, Governor Diokno, and the team working with him for joining us in this timely and relevant discussion this morning. Hi, there. Hi, Governor Diokno. I see that you have shifted your account. We can see you, sir.
Saan?
Background ng
We can see the governor. Hi, Governor. We can see you, albeit without a background. I suppose your team is setting it up. Hi, Governor Diokno. We can see your background now.
But I can hear you.
Now we can hear you, sir. Now we can hear you,
Alright.
sir. Yes.
So that's it. Did you hear my?
Sorry, sir. We missed maybe a large part of it, sir. What would be your advice to aspiring financial experts who are now getting into Bitcoin?
Cryptocurrency? Yeah, I think that cannot be a substitute for fiat money, that number one. But can you still hear me?
Yes, sir. We can hear you.
Can you still hear me?
Very much so, sir.
Right. So, but that cannot be a substitute for fiat money. And but we have a working group here at BSP, and we've looked into this. And maybe the closest that we'll have will be what is called CBDC, or central bank digital currency. But that will probably be within the next 2 to 3 years in the making. Okay. Most central banks do not want this actually. I think they want some control over this type of currencies. What we call it assets, not currencies, by the way.
Assets. Thank you very much, Governor Diokno. Again, on behalf of the Philippine Economic Society, we thank you, Governor Diokno, for joining us in this timely and relevant discussion this morning. Thanks very much, sir. Now let me introduce our second keynote speaker for this morning. Dr. Dean S. Karlan is the Frederick Esser Nemers Distinguished Professor of Economics and Finance and co-director of the Global Poverty Research Lab at Northwestern University. His research focuses on development and behavioral economics, typically using experimental methods to examine questions about poverty and behavior change. He is the founder and president of Innovations for Poverty Action, a research and policy nonprofit that discovers and promotes effective solutions to global poverty. He is on the executive committee of the board of directors of the MIT Jameel Poverty Action Lab. From 2005 to 2017, he was a professor of economics at Yale University. And from 2002 to 2005, he was a professor of economics at Princeton University. He co-founded StickK.com and Impact Matters and co-authored 4 books, More Than Good Intentions, Economics, Failing in the Field, and the Goldilocks Challenge, and Economics, a Principles textbook. He received a PhD in economics from MIT, an MBA and an MPP from the University of Chicago, and a VA in International Affairs from the University of Virginia. Ladies and gentlemen, our second keynote speaker, Dr. Dean Karlan of Northwestern University. Hi, Dr. Karlan. I think you're on mute.
Unmute. There we go. Oh, and it went the wrong way. Do you see the screen share or do you see the other screen?
We see the presenter view.
Yeah, hold on. Let's flip these around. Okay, now do you? No, you still see it the other way, right?
We still see it the other way. Under display settings, there would be switch a switch of the view.
There we go. Display settings. Come on. There we go. Now it's better, right?
The screen is not yet shared, Dr. Karlan.
Oh, it's not shared. Okay. Well, that's okay.
We
Now?
can see it now, Dr. Karlan. Thank you.
Okay. First time on Zoom. I'm just discovering this technology. That was a joke. Sorry. Hi everybody. I wish I was in person. I love coming to the Philippines. This is, I think, the longest I have not been to the Philippines in my entire career. I think probably fairly accurate. My very, very first trip internationally after I finished my PhD was to fly into Manila and immediately get in a car and drive to Baguio overnight. I've had fond memories ever since going back. So hopefully when it's all over, I will be back shortly and love to meet many of you who are here today that I haven't met before. Okay, so I'm going to talk about what the title says here, social protection during COVID-19. I'm going to share with you some results from around the world that we did about the state of affairs for poor households. No surprise that, as we're well aware, COVID has been a massive economic shock to the world. And of course, when there's shocks, that is part of when we think about poverty, it's not just about levels of income and levels of consumption, but it is about vulnerability. And that has come through loud and clear in some of the data that we've seen, really impressing upon us the need for social protection policies. And, the reality is no one was prepared for this. So this is not the type of thing where where there was existing policies that were just, immediately ready to roll in. And so it speaks a lot to the need for, as one of the topics of the gathering is digital solutions that can be rolled out more quickly. I'll talk a little bit when we get there about a program in Togo, for instance, that we were able to work with the government on to evaluate. They moved much faster than we did. We kind of came in after they'd already launched it. Okay, so first, let me just tell you where we started in the very, very early bits. IPA, Innovations for Poverty Action. We've worked in 54 countries. Philippines was our first country that we worked in. Longest office we've had is Philippines, and Peru were the two places we began. When COVID hit and we saw around the world what was happening, we put in place a program called Recover. And this program had a few different goals. One was some rapid response surveys to answer critical policy questions. We worked in many cases with government to help collect some of the data that they needed to know, like what, we said there's a lockdown, but what's actually happening on the ground? Are people working? What's happening with food security? We created a hub to centralize a lot of the research and policy that was coming out, kind of slowly, and now we're seeing a lot more. In the end, we've seen over 80 studies that have been put together that IPA was either involved in beforehand or got started because of COVID, with things like cash transfer programs, many of them through digital wallets. Worked with about 15 governments on evidence-based approaches to help think about what they can do with limited resources and limited capacity for rolling out programs in person. So how do you shift things to digital? And then we also did engage in a lot of research on research, a lot of methods issues. We're used to in-person surveys. Just this talk alone, I'm not used to. I'm talking on my computer. It feels weird, right? There's a lot to learn about this, and it's no different from data collection. With data collection, we're accustomed to that in-person survey where we train people to read the body language and the tone of voice of people, and you shift that to a phone, and there's a lot of questions about how to do those types of surveys as effectively and still get quality information. Just to give you some punchline, we have this one paper. We collected information from 9 countries, Philippines being one of them, and this is the data that came out of the Philippines. This was published in Science Advances. 64% of employed individuals reduced labor supply. And this is, it's a massive shock, as we all know. And one of the punchlines here, though, is very much that the vulnerability. These are numbers in aggregate. It's even worse for the low-income households. 89% were receiving government support. Of those, 97% food, 45% cash. That's actually really high compared to a lot of other places. That's, kudos to some of the systems that were in place in the Philippines to be able to jump in. 26% reduced food consumption in the past week. And students couldn't go to school, and distance learning is just not there. So how do we build, and this is the thrust of where I want to talk. I want to, be a little more rosy, so to speak, and let's, in the sense of what lessons can we learn from this, and how do we build resilience ahead? Not to say this, let's hope this isn't going to happen again, but the reality of this kind of vulnerability to shocks, there's many other kinds of shocks that can hit households and communities at large, where a good social protection policy can help in those cases too. So I'm going to talk about this program called the graduation approach. The term graduation approach has morphed and has some different names to it now. But the idea of the graduation approach, the underlying theory here, is that the problem with poverty is not as simple as one thing. And if it were, we probably would have solved it long ago. If it was just a question of capital, and like the cliche of you need money to make money is the truth out there, and that's the complete story. Well, then we would have seen things like cash transfers or maybe even microcredit lead to like massive transformational changes solving problems. And even though we do see a lot of benefits from programs like that, we don't see the kind of large scale transformation we like to see. Same thing with enterprise development and training. Again, some cases where there's been some successful programs, but it's rare to see one that really just kind of lifts up an entire set of people and works kind of at large scale. So the graduation approach takes this philosophy of saying, well, wait a second, why are we doing one thing at a time? Maybe the problem is multifaceted, and as such, the solution has to be multifaceted. And so that's basically the kind of philosophy behind the program. So we set off when we started this effort to study this in many countries. And the initial paper that we produced has the yellow stars: Honduras, Peru, Ghana, Ethiopia, Pakistan, India in it. Bangladesh is where Brock had started this program before, as kind of the first of the pilots, and we learned a lot from their experiences there as we built these other sites. Yemen I put in blue because it wasn't part of the original paper. We actually just finally published this paper, but a civil war hit for Yemen in the middle of us doing the study, and so it was delayed in getting the results. Overall, the program is striking. There's two main takeaways from this graph. Hopefully you have. This is just the kind of aggregate per capita consumption, just thinking about that as kind of an important, or perhaps the most important outcome, if you want to think about it as a metric of poverty. And one takeaway here is that it's the pooled results, the blue on the left, show that it's actually leading to a pretty sizable improvement. The first line, the end line 1, end line 2, that refers to the 2-year and the 3-year results. So it's actually generating long-term results that are sustaining themselves. The other takeaway you may have from this is, what happened to Honduras? And and Peru didn't look so good either. Is this just Latin America? The answer should be no to that. And one of the lessons from this is that there is some variation, and we need to learn more about that. I don't have a really good answer for you as to why Peru wasn't as good as Pakistan or India. I can tell you what happened in Honduras, which was there's some implementation challenges. So that one we can actually kind of understand more crisply what exactly happened. But a lot of times we find these differences and we don't know, right? Luckily, most of them are above the bar in terms of passing cost effectiveness. As we see from this. So if you think about, do the benefits exceed the costs? They're all above 100%, except for Honduras. But it is expensive, even though it passes cost effectiveness. If you want to corral that much money from, a government social protection program, it has to come from somewhere, and it is a hefty bill, particularly for a country that has a lot of poverty. Typical cost here; these are PPP adjusted. Were often as high as $1,000. In Ghana, it was actually all the way up to $2,000. In some places, it was much cheaper, India and Bangladesh. I believe in terms of the cost structure, the Philippines, if you were to hold all else equal, would probably be in the $600 to $700 range per household. So one of the things that came out of those initial studies was this idea that, okay, great, this is like a proof of concept, and it was exciting, and to help learn this and help share this with governments and nonprofits that were interested in running this kind of policy. But still, we were left going, how can this design be improved? What are the things that we need to learn? How does it, and that some of that might be kind of universal lessons that we can learn, and some of that might be specific to a context, specific to the Philippines, specific to a specific part of the Philippines, where we know, okay, in this context, because of the enterprise viability or because of the social network fabric in this part of the country or part of the world, the program needs to be a little bit different. And those are lessons that need continuous learning and modification. So, one first order question, these two questions side by side might appear to kind of funny to you, but one of the most striking things to me is when we had this question about cost effectiveness and everyone was like, okay, great, how can we make these more cost effective? There were people who said, let's see if we can reduce the costs by removing some of the components that were somewhat expensive. For example, one of the components was that the program had field agents who would go to the households and work with households, visit them once a week or once a month for 2 years. That actually added up to about 30% of the cost in some places. That's a pretty hefty cost. So, kind of wise people said, what's the value of that visit? Is that really needed? Because we could save 30% and then help 30% more people for the same amount of money. That sounds good. So that was an argument for fewer components. Others said, but maybe, they noticed that there were some people that were doing really well with the program and other people not as well. And so then the question was, well, maybe we should add more components. So, you might be hearing this and going, well, doesn't that make it more expensive? But wait a second, if it costs 10% more, but increases the benefits by 50%, that's actually a good move. Right. And so that's a question that was, we thought it was an important question. And in fact, one of the specific extra things that people talk about is on the psychosocial aspects of the program. And we are testing now in Ghana, and I'll share some preliminary results from that, on a cognitive behavioral therapy program. And same thing in Niger, a program that's kind of very similar to that with a very strong psychosocial component. The other question was a bit practical and somewhat theoretical. Was that a lot of times we saw implementers say, well, it's not just a budget constraint we have, although that's important too. We want to lower the cost. But we actually have a constraint in terms of the human capital of our staff and the number of field agents we have to hire to go do weekly household visits to every one of these households. And we just cannot do that for 1 million households. We just don't have it. It's not in our government ministry or nonprofit. But what if we did it in groups? If we could have a field agent go to a community and meet with 20 people at once, well, they could do 2 or 3 of those a day, and they could end up seeing 60 people. And that is more viable, both in terms of the staff management and the hiring and training of staff constraint, but also in terms of budget. And so that was one kind of very practical proposal. Another aspect that's a little bit more theoretical says, but what if in this program, it actually helps to get groups together because they can form more collaborative businesses? That maybe there's some thresholds and some economies of scale. And if everybody gets $200 to start their own enterprise, and you end up with 5 $200 enterprises, maybe one enterprise with $1,000 of investment money being put into it, and 5 co-owners, using their comparative advantages to take on the parts of the enterprise that is well suited for their skills, and they work together. Like maybe they can make more than 5x what they would make individually, right? I mean, there's a reason firms exist in this world, because of those kinds of individual comparative advantage and skills. Of course, there's moral hazard and problems of putting groups together and record keeping challenges. And so this is a valid question. Like, will this actually work well or not? So this is the work we've been doing in the Philippines, and this was set up before COVID started. And lo and behold, because it was there and because COVID hit, we're then able to actually look at this program and not just ask the questions that I posed about the study and the implementation that were kind of our design when we set out to do it, but now we can also look and see, well, did it help during COVID or not? So the program was coordinated. IPA, Innovations for Poverty Action, was the research arm, and helped collaborate between these three groups. Program funding came from ADB, program implementation came from Dole, and program design and training came from Brock. And so we tested a few different variations that are motivated by what I've said so far. So variation 1 was group livelihood. So a group of 20 individuals in the village formed groups of 3 to 5 people. And the question is, perhaps this is more effective due to efficiencies from pooling, expanded choice of higher return assets. One of the simplest examples I would often give with this is goat herding. If they were given goats, and then you end up with 5 different people herding goats with 4 goats each, that's obviously not as efficient as putting the goats together and having 25 goats and maybe 2 people herd them and take care of them, and they can rotate who does the tending of the goats each day. There's obviously things with stores where it helps to have some economies of scale as well, and then sharing different roles there. So could be clear cases where it's more effective to have these groups. But also, we are economists, we understand moral hazard, unfortunately. We'd like there to be no moral hazard in the world, but of course there is, and a lot of contract theory and a lot of program implementation is very much about thinking about where there's issues for moral hazard. And if you have a group and we don't have formal record keeping, there's no auditors, they're gonna be able to come in and so how are these groups going to coordinate, and are they going to manage to successfully kind of organize this kind of enterprise? A second variation looked at group coaching. So these are the household visits that I mentioned that's part of this program. But instead of doing individually, it's done as a group, right? And so the idea is that perhaps this is more effective because people can learn from each other. Someone speaks up about a problem they're facing, and someone else is like, I have that problem too. That's very interesting to hear how you solved it. I'm going to use that in my life now too. Or they can pose a problem and others can propose solutions that maybe come from peers who know them well, rather than a outside field agent who, maybe has a kind of rule book and says, oh, and they say X, I have to say Y. But, without knowing people as well, they might not get the optimal answer. But by having the group there kind of supporting each other, and exchanging information, building social ties, that might actually lead to better outcomes. Of course, there could be a downside, right? It is less personalized information and exchange. If you have a field agent who is going to a house and spending half an hour one-on-one with someone, that person can reveal private information they may not want to share publicly. And they also just get more tailored one-on-one time with a field agent whose job it is to help them think through the problems they're facing and how to overcome them. And so there's a trade-off, right? Naturally, this is why we do evaluations. I don't know the answer to this. Like, I just can pose the questions and I don't know the net effect. So this was done down in Negros Occidental, in this area. And so here's the design. We have treatment group 1, like I mentioned, that was group livelihoods and group coaching. Then we have another one, which was the individual livelihood. So they each got individual grants rather than a group grant, but they did get the group coaching. So the information sharing about their problems they might be facing, maybe it's about financial literacy, maybe it's a problem with their mobile money account, whatever the case is. And then the third treatment group, this is like the traditional graduation model with individual livelihoods and individual coaching. And so everybody receives a transfer that's basically worth $300 per person. It's a cash transfer, but that they're supposed to then use it to go and buy some productive assets. But as you know, in the group livelihood one, it's 20 times 300, so it's a $6,000 grant that goes to the community, goes to the group of 20 as a whole to start up their enterprise. And the coaching is every month, and they also receive skills training in the livelihoods that they are starting up. There's a savings group that gets facilitated and community mobilization. And this is all rolled out on top of the 4Ps program. And so you notice the green on the control group, even the control group is part of the 4Ps. That's the sample frame from which this was built in collaboration with the Filipino government. Okay, so The most important thing on the timeline to note here is that the assets were delivered for the group livelihoods. Two things to note. One is that they were delivered just before COVID hit, or starting October 2019 to March 2020. The other thing that is important to note is that they were much more delayed than the individual livelihood. So and that was not intentional. And so there is a difference that we're kind of have no way of separating out empirically when we look at the results between kind of one is a little bit of shorter run and one is longer run, and that was not, to be clear, not randomized. So the midline survey was done over the phone because of COVID. Target sample was 77% of the sample, were the ones that we had contact information for on the cell phone. We reached 63% of the targeted. And overall, luckily, we did not see any correlation between response rate and treatment status or baseline characteristics, which is always a concern when our response rates are not super high in the high 90s. Want to make sure if people were unhappy, for instance, about which group they happen to be in, or it could be that the treatment status led them to be able to migrate or not migrate, which we know is obviously a very important issue in the Philippines, and that makes people easier or harder to reach and find. And so these are the kinds of things methodologically that we care a lot about paying attention to, and luckily from a methods perspective, we do not see any differences here. So here's our basic results. I'm obviously showing you very high level results. There's no paper yet from this as we're waiting for more results. But they actually looks really good. We were very, very impressed, and that this program that was implemented by Dole, designed by Brock, did make an important difference in people's lives. So some very basic results here, all done with bar graphs, obviously, sorry. But first of all, any income now and then was the promoted business, and we see in the control 28%, and we see in all three treatments. By the way, one punchline from this is we're not really seeing much difference between the three treatment arms. We see that they all kind of worked and roughly about the same. Do they have any income from the business? And goes from 56 up to 69 to 76%. Total hours worked does go up. This one is not significant statistically, although I think if we pool the three, we do end up with a statistically significant result. On financial health, could you pay for an emergency? If something happened and you needed 5,000 pesos in 30 days, could you come up with it or not? The proportion that said it would be not difficult or only somewhat difficult went up from 25 to 31 to 32%. So a 6 percentage point improvement there. On food security, and obviously this is where we're really getting to the heart of one of the most important metrics that we looked at in terms of economic outcomes during the COVID crisis, was reducing food consumption. 69% of the control group said that they did reduce food consumption because of COVID, whereas in the treatment group, it was only 59, 61, 55%. Did you skip or delay healthcare visits? 29% of the control group did do that, whereas only 29 to 22% of the treatment group. So that's like about a 1/3 reduction in that having to happen. And children working also improved. 10% of the control group reported that children ended up working because of the COVID issues, whereas the treatment groups were 5 and 6%. Digging in more on the food security results, number of days in which they did not limit portion sizes at meals goes control group was 5, but the treatment groups were 5.5. So this is about a 10% improvement in this. Number of days in which they did not reduce the number of meals, number of days in which they did not reduce the kinds of food eaten. So kind of across the board, we are seeing, I don't want to oversell them and make them seem like they completely eliminated food security, but these are noticeable changes in my view from a program that was not designed to handle the COVID shock and still did have some support that was able to provide people. And mental health did increase, although this result is slightly weaker than some of the others, but it is here. So on feeling anxious, nervous, anxious, or on edge, 2.2 on a scale of 4 for the control group. This is signed the other way, sorry, I believe. Shoot. I believe this should be flipped. There was in general, reduction. So sorry about that. From elsewhere, I want to share results. Going to be much shorter, but I want to share some results that we've now seen from 3 other places on graduation. One of these during COVID, the other 2 not. Oh, that was the wrong order. Sorry, these slides were reversed. So, just conclusions from the Philippines results is, there were implementation challenges, and despite that, we're seeing positive impacts across multiple measures and the resilience from COVID-19 because of the program. So that's kind of exciting to see that the program can have those kinds of impacts. The lower cost group coaching did not reduce effectiveness, and it's cheaper. So it likely wins from a cost effectiveness perspective because we rarely see many differences between the different treatment arms. So when that happens, choose the cheapest one. Now, these are really short run, I want to be clear. So some of the theory of this might be that no. The improvements will happen more in the long run. We did just conclude the end line results, and so we'll have those in 2022. Would love to share them with people if there's, we do expect to be back in the Philippines, and once spring hits, and if there's any windows to share, would love to do so. So I want to share with you now 3, very briefly, one slide for each, some results from other places that help triangulate. No one study should ever be the kind of study that you think, well, that's it, there we go, now we know, let's move on. It's all a triangulation. We're all standing on somebody else's shoulders, and so we do multiple projects. They learn from each other. Policy needs to kind of absorb all of these and then try to figure out what might be the right context. So this is a program run by a nonprofit called OPSI in Uganda. It was done in a refugee area in Western Uganda. So there's actually part of it is refugees and part of it is host communities. Here it's a similar kind of test, not exactly the same treatment arms, but similar with coaching, individual coaching and group coaching, and then individual coaching and no asset transfer. So that's one of the key differences. And so what we see here, first of all, is that all the programs work. These are all treatment effects relative to control. There is a control group here, but I think of control group as 0 here. And these are all showing you the treatment effect relative to the control group. And so what do we see here is that the program with the assets, when they transfer the equivalent of the $300, have much bigger impacts. But even when you don't do any assets, you still see some positive impacts. They're about half of the others. So the productive asset value goes up by 0.25, 0.27 standard deviations. The promoted livelihoods activity is 0.5 standard deviations. Food security goes up 0.95 standard deviations. That's a huge impact. And this is during COVID when these data were done. In Niger, we have a study. This was pre-COVID. The striking thing here is that this is one of the studies where I referred to earlier as where people were like, well, maybe we should do even more rather than less. And so here there's a very strong psychosocial component with films and some psychosocial training that's kind of almost like a cognitive behavioral therapy that was added on. And so the control group here is the gray. The blue is the full package of everything. But then we did have 2 extra arms. One was where it's just the capital. I'm sorry, well, by just capital, I really mean is taking out the psychosocial aspects. And then the yellow is the one that is the full, but taking out the capital. So no capital was given. So it's kind of close to this green one here, and then it's the full program, but minus the assets. Again, you kind of see fairly similar results on gross consumption. These are all statistically significant increases, and they're about the same to each other. Food security, they all get better. We do see a big difference in business revenue. The yellow here does not provide assets, and it's the one that lags behind in terms of business revenue, which kind of makes sense. It takes longer to build up revenue when you're not given a starting capital of $300. And so it takes them longer. When you look at by the 1.5 years, when we look at actually consumption, because it's on par, the yellow, the social arm, wins from a cost effectiveness perspective. Now it might not win in the long run, but we'll find that out as we keep tracking. But in this 1.5 years, it wins because it costs a lot less money, and yet it's generating the same bump in consumption at 1.5 years. And lastly, I'll share with you results from Ghana. Again, this is pre-COVID, and this is actually all pre-graduation. We then rolled out the graduation program, and we're about to get data that half of it actually was during COVID and half of it was just prior to COVID, just in 2 regions in Ghana. And here, the idea was, let's roll out this cognitive behavioral therapy program before the graduation program. And maybe by doing this program first, it'll really help the households embrace the assets that are being transferred and the coaching and the lessons and the skills training, and make it so that they're able to do that much better with the graduation program and the full services. And what we see here is control relative to treatment. Mental health is way up. Physical health is even up. Sentiments of self-efficacy, grit, and the Kessler depression scale is way down. One of the most striking things of this is that these results were basically the same, even if households were not, even if individuals, were not depressed beforehand. Because the program just targeted on poverty, but the depression rates were pretty high. From our survey, it was around 50%. But the program was just as effective whether someone was depressed or not. And so we think this is a really interesting result and might be an important arsenal in the social protection program. Whereas, a lot of times social protection programs just think like, hey, let's transfer money, transfer cash, livelihoods training, done. And this we hope will provide some insights as to whether we should also be expanding and thinking about mental health issues that make it so that people can embrace the other things that are transferred. So we'll find out more about that. And we've actually been exploring, and we'd love to try something akin to this in the Philippines as well. So lastly, I just want to say that this is my last slide. That all of the things that I've shared with you here are ultimately partnerships. We are just one cog in that partnership. IPA's bottom line goal is, how do we get more evidence so that there's less poverty, right? And so that's working with partners to help increase the demand for evidence, the production of evidence, and the implementation of evidence-based policies. And we do that through partnerships. That's not something we do, no one can do that by themselves. We do that with partnerships with academics, with government, with implementers and funders. And I realize most people here are academics. And so this is a very simple way of saying, please, if these are the kinds of projects you would like to be involved in, we are always looking for partners to work with. If that's the case, please reach out to me or Nash, and I put her email address on here, who is our country director for the Philippines. And once travel returns, hope to meet many of you. Happy to do seminars on campus, share some of these results, share other results, talk about future projects, learn more about what you all are doing, and ways that we can all collaborate. And so with that, I will close. Thank you very much.
Thank you very much, Dr. Karlan. Now we open the floor to questions. So I have two actually from our participants, one from here, from Zoom, and another from Facebook Live. So the first question, and actually there's a comment to it, is from Dr. Diokno. Very interesting and nice about the positive impacts of the program. How different is the graduation program from the Philippines DSWD Sustainable Livelihood Program, which gives seed capital for micro-enterprise for families, and Kalahi SIDS, or community-based grants, including capacity building of communities? What were the elements of the graduation program that contributed to the positive results which could be considered by social protection policymakers?
No, great question, and I wish I had a little chart to just line up the differences. And I don't know that any of them were it's one of these things where it's in the same spirit that we set up different arms here with individual versus group. There's going to be some subtle differences like that. There's a lot of similarities with the DSWD program. I think that I could be wrong with this, but I believe one key difference is the visits that take place, I think, are longer in the program that was done here than is done with DSWD. Don't hold me to that, but I think that's right. But I don't have a chart handy to be able to tell you exactly. But what I would say, though, is that in the big picture of things, they're very similar. There might be some key differences that are actually really important that I don't know. that's part of why we do tests like the way we did with Dole. But that in the big picture, there's a lot of similarities. On the community one, I believe that one is much more different if it's the program I'm thinking of, where that was, if I understand, again, my apologies if I'm thinking of a different program and that you're asking about. I believe that program was more about public goods and community development rather than private enterprise. This was actually trying to, the grants that were made were not to be used for, building a playground or doing something that's a public good, health clinic, things of that nature. As good as those things could be for communities, that's not what the money was for. The money was for livelihoods to produce income for those houses. So I think that's a key difference.
Thanks, Dr. Karlan. I have a patched-in question from Facebook Live from Mr. Fensky Sera Aman. When you say that cash-based programs, though we see the many benefits therein, we don't have that much large-scale effect. Please correct. He's open to correction, if any. Is there any standard around to which they can look up to in terms of this type of programs? My read on the literature of the cash-based programs is that there have been some that have been done at scale. There's a particularly exciting study from Kenya that was out pre-COVID, before COVID, that was actually testing for general equilibrium effects from cash transfers and finding really strong positive general equilibrium effects where the cash transfers led to more spending, more enterprise, more hiring, more everything for economic activity. There was a multiplier that led to noticeable macro level. By macro, I don't mean country because it was randomized at like a district level, but they did actually find what one would call macro level outcomes at the kind of broadly stated community level. So I think there is a lot of promise there. The one, the caveat I would say is that a lot of times, one of the key differences between cash-based programs and graduation programs is that in a lot of cash-based programs, the money gets spent quickly. Now, who gets to decide whether that's good or bad is obviously a kind of in some level, a deep question. I have an answer on that. But that's one of the basic trade-offs between a graduation program, which is designed around the run income and might pass cost effectiveness, and so beat a cash transfer program just from a straight kind of how much consumption goes up divided by cost. It might win on that metric, but it's winning because it's building a longer stream of income consumption. Whereas if you just transfer $200 to someone and they spend $150 on their roof, well, that's great. They spend $150 on their roof, but then their next year's income is not going to be up as high in next year's consumption, and so the timing of the increases change a lot. And so that's one of the key differences between cash transfers and graduation is really the timing of the benefits. And so it depends on your discount rate there, who you're going to declare the winner on that. Thank you so much, Dr. Karlan. I believe that's all the time we have for our Q&A section. Again, on behalf of the organizers and the Philippine Economic Society, we thank you, Dr. Dean Karlan, for joining us in this timely and relevant discussion this morning. Thank you, sir.
Thank you, everybody. Hope to meet more people when I'm there next.
We look forward to hosting you in person next time around. Thank you.
So excited to get back.
Now we proceed to the next part of this morning's program, a panel discussion entitled Building Back Better, the Philippine Economy. To introduce us to this session, I now give the virtual floor to Dr. Alvin P. Ang, professor at the Department of Economics of the Ateneo de Manila University and a former president of the Philippine Economic Society, who will be moderating this panel discussion. Dr. Ang?
Yes, thank you, Pao, and good morning, everyone. It is my pleasure and privilege to moderate this session. Really a good, detailed discussion that will follow after two, broad and then specific keynotes that will bring us to how to really build better. And in this session that we are going to have, we have a panel discussion, and we will tackle basically how to manage building back almost 2 years into the pandemic. And key issues that we'd like to answer in this session are what issues have emerged and how we have leveraged digital innovations to build back better. And joining us this morning to answer these questions are four panelists representing the public, private, and development sectors. I'd like to introduce them one by one and then give them the floor later. So let me introduce first our first speaker. Ms. Cecilia Borromeo is the President and CEO of the Land Bank of the Philippines, where she started her development banking career 32 years ago. In 2017, she was appointed as President and CEO of the Development Bank of the Philippines, giving her the distinction of leading two government financial institutions. She rejoined Land Bank in March 2019, focusing on intensifying the bank's support to the agricultural sector while further fortifying its banking operations. She continues to steer Land Bank in its expanded role during the pandemic to carry out the various programs of the national government, particularly in delivering financial support interventions to vulnerable sectors and in accelerating local economic recovery. Panelist number 2 is Mr. Jose Emmanuel Hilado, who joined the Union Bank in July 2017 as its Chief Finance Officer and Treasurer. He concurrently manages the finance, treasury, distribution, and wealth management functions of the bank. He has more than 30 years of banking experience behind him and has held various positions in treasury, trading, investments, correspondent banking, bank operations, human resources, and purchasing. Prior to joining Union Bank, he was SEVP and Chief Operating Officer of East West Bank Corporation. He was also the treasurer of Rizal Commercial Banking Corporation for 6 years and chief trader at Bangko de Oro Unibank for 4 years. While at BDO, he was also treasurer of BDO Private Bank for 3 years. He was president of ACI Philippines and was its director in 2014. ACI Philippines is a business organization for financial market professionals involved in foreign exchange, fixed income, and derivatives market. Mr. Hilado obtained his Bachelor of Science degree in Business Economics at the University of the Philippines and his MBA degree at KEYNOTE HKUST. He is also a certified treasury professional. Our third panelist is our good friend, Dr. Eli Remolona, Professor of Finance and Director of Central Banking at the Asia School of Business in Kuala Lumpur. He directs the Master of Central Banking program, a collaborative effort with the MIT Sloan School of Management. Before joining the ASB and MIT Sloan in 2019, Dr. Remolona was Chief Representative for Asia and the Pacific of the Bank for International Settlements. As regional head for the BIS in Hong Kong, he was responsible for all BIS business and activity in the Asia-Pacific region, including research, high-level meetings, and financial services for central banks, sovereign funds, and international organizations. In 1999, he joined the BIS in Basel, Switzerland, and for 6 years served as the head of financial markets and editor of the BIS Quarterly Review. Mr. Remolona was also research officer of the Federal Reserve Bank of New York, where for 14 years he was engaged in FOMC briefings and in research on issues in international finance, financial markets, and sovereign risk. He has taught at Williams College, Columbia University, New York University, and at the University of the Philippines. He has a PhD in economics from Stanford. At present, he is associate editor of the International Journal of Central Banking. And fourth, and certainly not the least, Dr. Suleiman Colley Bailey is the World Bank's lead economist and program leader for equitable growth, finance, and institutions practice group for Brunei, Malaysia, Philippines, and Thailand. Before moving to Manila, he was the program leader and lead economist for Central Africa. He joined the World Bank Africa region in January 2014 from the Operation and Policy and Quality Unit, where he was covering development policy, lending, and guarantee policies and operations, and represented the unit in the Non-Concessional Borrowing Policy Committee. Before OPCS, he was in the Eastern and Central Asia region, working simultaneously as trade economist and country economist of some former Soviet countries, as well as ECA regional trade coordinator. Before joining the World Bank as a young professional in September 2006, he used to be a lecturer at the INSEA of Abidjan, teaching assistant at the University of Lausanne, and economist at the Economic and International Relations Department of Nestle in Vevey, Switzerland. Quite impressive panel that we will have this morning. So each panelist that I introduced earlier will have a 5-minute opening statement, and we will start as introduced. So we will start first with Ms. Borromeo. They will answer these three questions. First, with almost 2 years into the pandemic, how have we managed building back? Number two, what issues have emerged requiring a rethinking of how to build back better? And how can we leverage digital innovations to build back better? So let me call on Ms. Borromeo to give her opening statements.
And thank you, Dr. Ang. Thank you for inviting the Land Bank of the Philippines to be a part of this forum. I am happy to share how we in Land Bank have managed to build back up from the impacts of the crisis. As I only have 5 minutes, I will shorten my presentation as PPTV, People, Products, Technology, Values. Let me go through this strategy in a nutshell. In Land Bank, the first line of defense is our people. So we built on the familial spirit of working together, making collective sacrifices, extending limits, and pushing boundaries in order to deliver continued service to our customers. We made sure that our personnel are safe and equipped with the necessary tools to protect themselves and the customers transacting in our branches. We managed to address the disruptions in our operations with early adoption of alternative work arrangements and other measures like platoon-like shifts. If a branch needed to close due to COVID infection of most of the personnel, we have backup branches to serve the customers of that branch. By taking care of our people and rallying them to keep their focus and commitment to service, we were quick to pivot and respond not only to our day-to-day operations, but also to take on additional tasks that were assigned to the Land Bank, especially in serving as the distribution arm of the social protection programs of the national government in support of sectors that were adversely affected by the pandemic. We were also quick to offer loan products that are responsive to sectors that are in need of financing with low interest rates and relaxed repayment terms. The second is leveraging on technology. The crisis has pressed the need for digital transformation in order to expand rich channels and platforms to enhance service delivery. We've seen an exponential growth in the utilization of our electronic and digital banking channels, which were driven by mobility restrictions. We continue to strengthen our online payment channels for fees, dues, and other obligations to make transacting with government agencies safer, easier, and more convenient. Another step in Land Bank's digitalization thrust is the transformation of our subsidiary, the Overseas Filipino Bank, into a digital-only branchless bank. This enables the overseas Filipinos, in particular, to open their bank accounts, send money to their beneficiaries, pay bills, and save their hard-earned income using our digital platform without the need for them to physically go to any touch point of the OF Bank. There is more to mention in this regard, but for brevity, Digital transformation is a journey that we are seriously undertaking to drive the shift and accelerate growth towards a better normal. And the last is reinforcing values, anchored on customer relationships that were nurtured over the years. All of these are fostering collaboration, which is key to our unified stride to move forward. We are gratified that we can build on the trust established with various customers and development partners, including the national government agencies, the local government units, the small and medium enterprises, the countryside financial institutions, and other private companies that we serve. There is no substitute for good old unity and cooperation to recover together. So that's our PPTV strategy of building resiliency to get back up. We took care of our people, offered responsive products, leveraged on technology, and reinforced good old values of trust, relationships, and collaboration to rise as one. Thank you.
Thank you, Ms. Borromeo. We will now go to our second panelist. I'll call on Mr. Jose Emmanuel Hilado to give his opening statements.
Thank you, Dr. Ang. Good morning to all the conference participants and my fellow panelists. It is an honor to be here this morning in the 59th Annual Conference of the Philippine Economic Society. I am also an economics graduate from UP, and so economics continues to be a continuing interest in my line of work. My only frustration is I never became a member of the Philippine Economic Society, so I hope it's not too late to become a member. When I was told that the theme of this conference is building back through digitization, I could not help but look back on how chaotic it was at the start of the pandemic. Last February 2020, we were still trying to figure out how the COVID-19 pandemic would play out and what measures we could take to make sure that our business would be resilient through the crisis. We barely had a month to prepare for the complete lockdown. And as if that was not enough, global financial markets were adversely reacting to the pandemic, bringing down equity markets globally, while at the same time bringing down risk assets like US Treasuries. So in hindsight, it was really a challenging period. In our case, we were fortunate that the bank had undertaken a digital transformation strategy that started in 2016. And so when the lockdown was implemented last March, we were 100% work from home from day one. And that has not changed until today. Our priority back then was to make sure that we were 100% operational, but not at the expense of the safety of our people. Having transitioned seamlessly to work from home status, the bank was in a good position to assist our clients in their banking needs. The priority then was how to make sure that our clients can continue to do their banking needs within the safety of their homes. As a start, we already had the facility for clients to open a bank account using their cell phone through the Union Bank app. They could also initiate bank transfers to InstaPay, and we waived the fees for that. And they could deposit checks by just taking a picture of the check so that there was no need to physically deposit it. We also innovated on existing products and launched new products. For example, in response to a popular demand to have a facility to send money to remittance centers, we created a feature in our app that would allow a Union Bank client to send remittances to the outlets of Palawan Pawn Shop, Luwilier, Parahab, and LBC. The total lockdown deprived the unbanked beneficiaries in the provinces from receiving money from their relatives or friends in Manila. Because of this new feature, a Union Bank client would actually send a remittance which can be claimed from the outlets of the remittance companies in the provinces on the same day. And we created this product within 3 weeks, given the urgency of the need. For our City Savings Bank subsidiary, which caters to teachers' loans, we also had to adjust to the needs of the teachers. Since schools were closed and lockdowns were happening, the teachers could not get out of their homes. So instead of them going out, our employees went to the homes of the teachers to process their loan application, and in some cases, even deliver the money. This was possible as our lending officers are able to use tablets or small computers off-site. On the credit side, we launched innovative credit products that utilize alternative credit information. For MSMEs, we launched a loan platform called CCAP through our wholly owned subsidiary, UBX. So an MSME account can apply for a loan up to 1 million pesos and get an approval in 24 hours. For personal loans, we launched an online facility that allows for a loan application that can be approved and released within a few hours for up to 250,000 pesos. Our UBX subsidiary also launched innovative product platforms for MSMEs. One is Sentral, which allows an MSME to create an online store in the platform, complete with payment portals. So it's like having your own website. You can take a picture of your products, post the prices, and make it available to your customers. They also launched Box, which is a payments platform that allows an MSME to integrate all forms of payment channels in one platform, be it online payments, installment, cash over the counter, or credit card. We also work with the government for some projects. We work with the Bureau of Treasury to launch the Bonds.ph platform, which is an app that allows investors to invest in government bonds like RTB and Premium bonds with a low minimum of 5,000 pesos. This is an amount that a typical bank won't even accept. We were actually surprised with the interest, and so we ended up getting orders from all over the world, from Filipino OFWs. I think about 22 countries all in all, where we had Filipino OFWs. We also work with the DSWD and the local governments to address the logistical challenges of distributing the Social Amelioration Program, SAP, or what we call Ayuda, through our EON debit cards and through the rural banks that were part of our I2I system for rural banks. I2I system is a system offered by UBX that provides the rural banks a facility to do banking services for their clients. So more than 1.1 billion pesos was distributed through our network. And we also work with the Supreme Court for the e-payment facility for court fees that allows the courts to receive fees or payments from litigants online 24/7. To summarize, the pandemic accelerated the adoption of digital banking. The pandemic was the inflection point as people could not go out to do their banking needs or refused to do so for safety reasons. We believe that by allowing people and businesses to do their banking transactions unhampered and by providing banking services to the unbanked, banks like us have helped the community and the country in general to build back from the pandemic. Thank you.
Thank you very much, Mr. Hilado. Very interesting pivot and sharing of how UBP was able to help in this pandemic. Would now like to call our third panelist, Dr. Eli Remolona. Eli?
Good morning. Thank you, Alvin. Thank you to the Philippine Economic Society for allowing me to share my views. To talk about building back, let me focus on a global perspective. And to do so, I'm going to compare the situation now with what it was in the wake of the previous global crisis. So yes, the global recession has been deeper in 2020 than it was in 2008, 2009, but the recovery this time looks much stronger. We're seeing a truly V-shaped recovery. Globally, we should find ourselves at pre-pandemic levels by mid-2022. Recent GDP and PMI data suggest that this recovery will run on two engines. In the US consumer will be one engine, and then as usual, Asia will be the other engine. But amazingly, this time it will be Asia ex-China. China will not be contributing to the recovery this time. But let me get to the China part later. So what justifies this sanguine global view? Well, there's the welcome arrival of vaccines in much of the world, of course. But beyond the vaccines and the return of mobility, I would suggest two things. First, we're observing an unprecedented economic policy response. Second, the scarring this time is actually not so bad. When it comes to economic policy, what we now see is monetary policy and fiscal policy that are pushing together. They're pushing in the same direction. You may recall that this wasn't really the case back in 2010, 2012. Yes, the central banks of the world, by and large, provided very accommodative monetary policy, as they're doing now. Yes, both the US and China put in place very significant fiscal stimulus, but not so the euro area. On the fiscal side, the second largest economy in the world was pursuing IMF-style fiscal austerity. Even monetary policy did not really come into play until late in the game, when Mr. Draghi said, whatever it takes. And he said that in July 2012. This time around, thank goodness, both monetary policy and fiscal policy in Europe are doing their part. What about the scarring? The ugliest scars of the previous global crisis were those of balance sheets. The balance sheets of mortgage borrowers, especially in the US and in Europe, the balance sheets of the lending banks, and of course, the balance sheets of investors in mortgage-backed securities. Restoring those balance sheets to health was a slow and painful process. This time around, those balance sheets are for the most part quite healthy. Yes, the NPLs of banks have been rising, and banks have had to set aside substantial loan loss provisions. Even so, most banks around the world report capital adequacy ratios that exceed regulatory requirements. And I think Toto Hilado, as well as Ms. Borromeo, can attest to that. Most banks are flush with liquidity, and some are eager. Most of them, I think, are eager to lend. So what a difference from the previous crisis. So where's the scarring this time? Let me mention one really ugly scar. And China figures prominently in this one. This is why I think the engines of growth this time will involve Asia, but not China. Based on the GDP numbers, China is the only major economy that has seen 2 quarters of decline. The scar here is China's own brand of real estate balance sheet problems. The most notorious example is Evergrande, but the problems go well beyond Evergrande. They involve widespread speculation in apartment housing by China's middle class and heavy investment in this sector by local governments. By allowing these problems to fester, China has made these problems politically harder to resolve. So the good news is the strong global economy. The bad news is China. The question for us is, what role will the Philippine economy play in this recovery? Will it be as a leader or will it be as a follower? Bida ba tayo o saling pusa lang? Thank you. I can talk about the other issues later and the digital innovation issues later. Thank you.
Thank you, Eli, for that global insight, and it'll be interesting later to hear you that question and ask. Last but not the least, let's call Dr. Coley Bailey to provide us with his insights on these questions. Sir.
Thank you very much, Dr. And again, thanks to the Philippine Economic Society for extending the invitation to the World Bank and to me in particular. So I will make sure I stick to the 5 minutes so that we can have some back and forth a panel discussion later. That more than a year since the beginning of COVID-19 pandemic, the global economy is recovering from a deep economic crisis that significantly shrunk GDP, global GDP, disrupted global supply value chains, and plunged 100 million people into extreme poverty worldwide. This is a World Bank estimation. The slowdown of global economy was accompanied by a reduction in global carbon emission, which is a good news, at least in 2020, the one bright spot of COVID-19 crisis. But this has proved short-lived, as projection by the International Energy Agency anticipate that carbon emission will record the largest annual rise in 2021. In this global context, how have we managed building back here in the Philippines? The Philippine economy entered the crisis with a strong fiscal position and a strong growth history, hovering around 6% during the past almost 10 years. So this allowed the authorities to quickly deploy a three-pronged response to the crisis, and the World Bank, as a development partner, has been really working closely with the government along this three dimensions. The first one is addressing the health crisis, head-on. The second prong, providing support to livelihoods of daily income earners that have been disproportionately affected by the crisis. And the third prong is preparing for the economic recovery. So I'll quickly go through these three prongs, and hopefully we can move to the panel discussion now. So on the health side, the clear communication on the importance of non-pharmaceutical interventions, such as hands hygiene, social distancing, was accompanied by a progressive building up of a country's testing, treating, and tracing capacity, along with the reinforcement and the expansion of the healthcare facilities. As early as October, November 2020, following the global knowledge sharing from the World Bank to the authorities on a vaccine strategy that were being prepared around the world, the government swiftly adopted a vaccine strategy that has resulted to the Philippines having right now received 109 million doses as of last week, and expect to receive about 13 million in November and December. And the World Bank has a project covering that, but also many other development partners. The supply until year end is enough to cover 70% of the population, and hopefully help the country reach a herd immunity by maybe first quarter or second quarter of 2020. With the sound implementation of vaccine strategy, supply delivery has proven to be dependable so far. The biggest risk are the delivery system and vaccine hesitancy, but facing COVID-19 has strengthened the country's public health system. And as I said, the World Bank as a development partner has tried to help. On the social protection side, stringent movement restriction measures to contain the spread of the virus in one of the most densely populated area in the world, of the Metro Manila area, has have an impact on daily income earners. So early on, the World Bank with DSW revamped the 4P program with an adaptive social program engagement, beneficiary first, that kind of scaled up what we already were doing. We work with them and also with PSP on the financial sector inclusion dimension to make sure the program was really able to mobilize financing and also make it available to the poorest. The design of the additional financing project tried to improve the coverage and targeting as the authorities were accelerating also the launching of the PhilSys, the national ID system. And as I said, the World Bank as a development partner has been also providing support on that. So more need to be done to perfect the system, but facing COVID-19 has also strengthened the country's social and financial inclusion effort, and the World Bank has tried to contribute as much as possible by engaging with our partners. And on the third dimension on economic recovery, the accommodative monetary policy that was already clearly mentioned by Governor Diokno, supporting fiscal expansion to cope with COVID-19 has induced higher expenditure while revenue were contracting, and that kept the economy afloat. The prioritization of the Build Infrastructure Development Program, along with measures to make financing available and ensure stability of the system that were accompanying also the development of the digital economy has really helped the economy to slowly come back. So 3 groups of specific action and reform have also supported the economic recovery. The governor mentioned the FIS program to make sure that breathing space was provided to the financial sector. The Retail Trade Liberalization Act that has kind of is opening up the retail sector and providing, opportunities for some innovation also on the retail sector. And also some of the economic bills that are slowly signaling that the country is willing really to open up foreign direct investment with the Foreign Investment Act, the Foreign Investment Negative List, the Public Service Act amendments that have some provision that will really make the economy attractive. And the Create Law, obviously, that is also now streamlining the incentive system so that more firms in some strategic sectors can be also mobilized. And we think that the COVID situation is also creating some opportunity for Philippines, which is very present in the electronic sector and the BPO, because these are sectors also that have been really, really transformed before the crisis, but during the crisis, by global trends, with the new technologies that are opening up competition for many countries that can position themselves. The semiconductor sector where the Philippines position is also being transformed. The electronic vehicle that are being developed are creating space, but at the same time, they also need to have some reforms and some incentive that, can attract lead firms, in the global value chains that are already present in the Philippines. And the Create Law hopefully can also attract this. So in all these 3 dimensions, I noticed we see the cross-cutting digital undercurrents in the building back in the Philippines, the contact tracing, for instance, for the health dimension, the digital payment in the social protection aspect and the digital economy, and this digital economy dimension I also mentioned on the recovery side. And as a development partner, the World Bank has been engaged on the financing side, almost about 2 billion new engagement with the country, but also on the knowledge side. And I'm happy to come back on some specific aspect in the panel discussion. Thank you very much.
Thank you, Dr. Coulibaly. And this is an opportunity now for us to discuss in detail some of these things we have been, the panelists have given their initial statements. For our participants, you can type in your questions through the Q&A box so that we can read them and give them to our panelists. And those of you joining us through Facebook Live, you may also send your questions to the comment section. Okay, so it seems that no questions have come in yet, but let me begin by, I'd like to ask some of the questions, very interesting points raised by our panelists this morning. In our work in the Ateneo Center for Economic Research and Development, where we give economic briefings, one of the most interesting things that we always notice, pandemic or no pandemic, bad economy, good economy, is that the financial sector continues to be in a positive growth trajectory. And just very recently, many of the banks have already reported that they have gone back to pre-pandemic income levels. But looking at the loan portfolio, it is not as aggressive as prior to pre-pandemic. So I think this is a question for all the panelists, since I think most of you can answer the resiliency of the financial sector, particularly here in the Philippines. And maybe Eli and Dr. Colibali can talk about it on a global perspective. Let me begin with Ms. Borromeo.
Okay, thank you. Well, that's a very valid observation, no? Because banks, the bottom line, the net income of the banks have not only been sustained, but even improved, no, for most of the banks. And the reason being is that as we were able to manage our cost of funds very efficiently, and also our operating expenses. No, much as we would have wanted to increase, I can speak for Land Bank, to increase our loan portfolio to help more businesses cope with the pandemic. There is an issue on the demand side. Not too many businesses actually were also confident enough to borrow, and because probably of their fear that they cannot pay back whatever they will borrow because of the effects of the pandemic. And the BSP data would show that across the industry, there was a decline in the loan portfolio, not because of lack of funds, as one of our speakers, Dr. Remolona, mentioned. There is a lot of liquidity in the financial market, and that is also the case in Land Bank. And that liquidity actually enabled us to lower our cost of funds. So that drove the improvement in the net income of Land Bank. And we also shifted a lot of our transactions, a lot of our customers to our digital platforms, and that was more cost efficient. Thank you.
Thank you, Ms. Borromeo. Mr. Hilado, since the Union Bank has been at digitalization since 2016, as you mentioned.
Yeah, I agree with Cecil that one of the major reasons is really the drop in funding costs. The other thing is the banks have been highly regulated, and we are also following new accounting rules, PFRS 9, which is the expected credit losses. So the provisioning of the banks are more proactive than compared to the previous methodology, so that the banks always have a buffer to take the loan losses as they come. As for the growth in the loan portfolio, Cecil is correct that even if we want to lend, the demand was not there. And we actually saw corporate borrowers paying off their long-term loans because rates were now a lot lower. And in the areas where you have demand, the credit process is more difficult. Like, for example, the SMEs, while we were being encouraged to lend to the SMEs, it is not easy to lend to the SMEs due to the absence of credit information. So, as banks, we have a fiduciary responsibility to our depositors, and we have to make good credit decisions. So it has become challenging. The market that does not want to borrow, they have the credit information. The market that wants to borrow, it's hard to execute the lending because of the absence. So that's why I was explaining earlier that for us to do that, what the bank should be doing is to experiment with alternative credit information. So we have to go beyond the usual credit process and use alternative credit information. What's alternative credit information? So it's like using telco data, transaction history, social behavior. No? And you therefore have to create credit models or algorithms that would predict the probability of clients paying. No? But it's a new process, a new frontier, and banks will still have to invest a lot there if we have to lend aggressively to the SME market and the unbanked.
Thank you, Mr. Hilado. So big data. Eli, you have some ideas?
I agree with Ms. Borromeo and I agree with Toto Hilado. A lot of it is a tribute to the success of banking reforms, the reforms that were introduced since the last global crisis. We have tighter capital standards, we have tighter liquidity standards, and then we have what Toto mentioned, forward-looking provisioning, IFRS 9 provisioning. In spite of the loan payment holidays that Philippine banks went through, the impact has been very manageable. NPLs have gone up as they should, but as you would expect. But provisions have exceeded the non-performing loans. So I think they're going into the crisis in good shape. They're coming out of the crisis in good shape. And as has been said, it's really the lack of demand for loans. The banks are eager to lend. They have the funds to lend. They have the deposits, but the borrowers are not coming. That probably will not last, but that's a situation we find ourselves in.
Okay, thank you, Eli. Yeah, let me go to Dr. Colibelli. You have something to add in this discussion?
Sure. Maybe let me come back to the at least to what we notice now as the signaling of the banking sector. We, in our regional unit, we try to look at how NPLs have been evolving in the region, in the sub-region. And it's true that they have not increased significantly. But in this study, what we noticed was also how variable the definition of NPLs are in different countries. And, some aspects that are not covered that probably might be hiding, some challenging situation if, the definition, for instance, was the same across the board. We also know that, during the handling of the pandemic, there have been some regulatory forbearance, that's kind of a load, for instance, for the reporting of non-performing loan to be adjusted. And this might also be, coming back, when the situation of the regulatory is back to normal. So I think it's important to be cautious because the crisis has been really heavy for some sectors and for economies around the world. But because the proactivity of monetary policy and fiscal policy coordinated almost across the world has helped economies to be afloat. But it doesn't mean that, the real sector is as solid as, this overall economic sign are showing. So when the situation slowly comes back, probably some sectors, some real sectors would be facing more challenges because of the nature of the crisis. The tourism sector definitely would be struggling to come back to normal, and other sectors. So because of this reality on the real sector, it's important to be cautious and make sure that, financing and credit will be available for firms that were just, in a, I would say, cash constraint and needed some help to move back, and firms that were not efficient but have been protected also by all these regulatory forbearance, so that we don't keep in the system non-efficient firms. So it will be important as we go out of the crisis to really make sure that the real economy is really strong coming back. We did some high frequency survey to also get some feedback from SMEs, from firms at different level. And for instance, they are kind of regularly mentioning that so they were relying on friends and families to get credit. While we know that the banking sector has been really afloat with all the measures, it means that there is something that is kind of precluding the flow of financing smoothly from the decision taken at the highest level by BSP through the banking system and the real sector needing them. So there are a couple of things that will need to be kind of tightened as the economy is back to recovery. So just wanted to mention this.
Thank you, Dr. Coley-Bailey. So very interesting. We're now trying to gap all of these, nice policy directions and actions of banks and the actual real economy. And I'd like to paraphrase the question here of June Neri of BPI and former PES president. He asked that the technology basically will be the one to, bridge this gap. And as we have seen that the pivot of Land Bank and Union Bank have already done that. The question is, how do we prepare our labor market? Because in this kind of digitally led economy, not everyone not all sectors will be able to access or have that digital technology or skill capacity. So we want to prepare the labor market, effectively reduce unemployment, and capitalizing using digital technology. So how do you think can we use digital technology to be able to reduce unemployment, which, as I think in one of the World Bank's paper at the middle of the crisis, is saying about 20% of the people who lost their jobs cannot or will not be returning because of the change in the digital landscape created by the pandemic. And it's a combining factor working together. So let me go back to Ms. Borromeo. Your views, ma'am?
Yeah, I think financial inclusion is very important, and that is why Land Bank has collaborated with the Philippine Statistics Authority to give transactional cards to the PSA registrants for the national ID that were previously unbanked to be included in the banking community. And this was also, I think, mentioned by Governor Diokno when he gave his speech. And by including most of these previously unbanked in the formal banking community, I think the level of their financial literacy also will improve. And we actually have a program to gradually transition them into, first, they are just holders of transactional cards. We will transition them into basic deposit accounts, and hopefully when the economy will recover and they will have more stable sources of income, they can transition into what we know as a regular deposit account. So that's one, to introduce them to the formal banking sector through giving them first the very basic transactional cards. And of course, another intervention of the bank, which is very important, is to encourage more micro and small enterprises to reopen their businesses. And that is why we give them soft loans. Those that are already in the Land Bank ecosystem, they are existing customers, but their cash flow was impaired because of the pandemic. We give them longer repayment terms and even additional loans if that is what they need to restart their businesses. And the agri sector, which is also a big employer of our of Filipinos in the countryside. We, together with the Department of Agrarian Reform and the Department of Agriculture, the bank gives very low interest rates and longer tenors for their production activities. So all of this will hopefully redound to creation of more jobs. By the way, Land Bank is also collaborating with the Department of Transportation to distribute the subsidies given to transport operators and drivers. So I think in the last 2-3 years, we've seen significant growth in the number of Filipinos that are included in the formal banking system. And I believe as we grow this ecosystem, the economy will rebound and jobs will come. I hope sooner than later. Thank you.
Thank you, ma'am. Sir,
Since Cecil answered the question of June, I'd like to answer his question from another perspective. No, so that was from the point of view of catering to the unbanked. What I would like to offer as an answer is on the employment side. No? So I don't know if June was also referring to that. We have seen that because of the digitization efforts of banks and corporations, there is actually a shortage of technical people. Like in the case of the bank, we are always looking for systems analysts, programmers, and the like. And you can see that there is a shortage because the cost to pay this for these skills is going up, and it will not stop. This is happening globally. So if the Philippine government wants to help, I think vocational schools and schools should be programmed to answer the need for technical people, no, on the IT side. No. There will be a huge demand. It will continue for the next few years. And we have the people, we have the population, we have the right age. No? So I think that's one area that should be considered. Even in the case of Union Bank, we're already considering, running our own training programs so that you just have a steady pool of technical people coming in. No? Because your guys will always be pirated left and right, so you just have to resupply along the way. Thank you.
thank you, sir. Eli?
Alvin, I don't have a good answer to your question, but let me say why it's so important, why the question is so important. One of the most surprising issues that has emerged in the last few months is the unreliability of the supply chain. As a consequence, the big manufacturers are changing their supply chain models. It's no longer about finding the lowest cost supplier. It's now more about reliability and diversification of suppliers. This should have been a great opportunity for the Philippines. So far, however, the big manufacturers seem to be going to Thailand and to Vietnam. And I think the reason is that that's where they find the technical people that Toto describes. They're not looking for engineers. They're looking for high school, vocational school style technical people. So the question for us is, can we provide this kind of labor, and also can we open up soon enough so that these manufacturers can come and visit, and then can we show them the labor so that they consider us as a part of the new supply chain? I think that's a big issue for our country.
Yeah.
Thank you, Eli, for that insight. Now, Dr. Coulibaly?
Yes, maybe to build on what Dr. Eli just said, we are just finalizing, probably will be formally launching it soon, a report where we have looked at, global value chain reconfiguration in the Philippines in the COVID situation and for post recovery. And by looking at, how the trade dynamics has happened in the Philippines before, during the crisis, and in some of this global value chain, three are kind of very clearly coming out as strategic. The industrial, manufacturing, and transportation, which include the semiconductor, the automotive sector, the aerospace sector. We know that some of the big aerospace companies are here in the Philippines, in fact, but not leveraged enough to take advantage of all of these trends that are happening outside. The same for the TMT, the telecommunication, media, and technology global value chain with the telecommunication devices, but also all the transformation happening at the telecommunication level on the media side. And then even on the health sector, the health and life science, even the COVID health-related aspect. So this free global value chain has been really transformed before the crisis and accelerated during the crisis, and it's opened up opportunity for the Philippines maybe to reposition itself. There are some segments of this global value chain already present in the country. For instance, the semiconductor for the first one, the BPO for the second one, and also now the BPO moving into health for telemedicine and the like for the health and life science. But they need to be kind of more, I would say, strategically connected and revamped to take advantage of the opportunities that are being created by COVID-19. And skills is a constraint, definitely, but also FDI is a constraint because we need lead firms in some of these strategic sectors to really, help the country move, up on the frontier side. Because some of the projects now in the Philippines are a bit obsolete. So if you want to, take advantage of all of these drivers, we need to attract some lead firms that might come with some new technologies and the like. So it means that the FDI attractiveness of the country is important. So skills, definitely, the FDI attractiveness, and also the logistics, because you will be trading in and out, and also with some data. So it means the ICT. So all these are kind of combined challenges that the Philippines can take advantage exactly of this free global value chain that have been very transformed by the crisis, and where the Philippines is already positioned on some segments. And we have been interacting regularly with DTI, and hopefully, as this engagement continues, this can also provide some additional ideas on how to make Philippines exploit more the technological development of the last years. Thank you very much.
Thank you very much, Dr. Coulibaly. Well, we actually have to go to another session, so I'd like really to have more time to discuss digitalization and the points that we have raised earlier in your opening statements. But I hope that we were able to contribute to our conference ideas, great insights, supply chain, pivoting, health, BPOs, and the like. So the Philippines still have that opportunity. So we're looking forward to the rest of the conference. And so maybe our distinguished panelists, I'd like to thank all of you, Ms. Borromeo, Mr. Hilado, Eli, as always, and Dr. Coulibaly. We know that you can always come and join the PES conference. Mr. Hilado, we will recommend that you become a member. So you just need a member to recommend you. So we will do that. Thank you very much, everyone.
Thank you.
And
Thank you. Thank you.
Thank you.
Thank you.
Pass it on out to Pao.
Thank you, Dr. Ang. Thank you, Dr. Ang, and thank you to all the panelists that joined the discussion. We thank our resource speakers, our panelists and guests, as well as the officials and staff of the Philippine Economic Society for making this session possible. Let me also take this opportunity to invite everyone to the rest of the conference sessions lined up until tomorrow, November 12th. The lineup of sessions may be found on the website and official Facebook page of the Philippine Economic Society. Of course, we also thank our session participants who spent their morning with us or evening with us. especially those who asked questions, for joining this timely and relevant discussion. We request everyone to please accomplish our brief evaluation form to help us further improve our future activities. The link to the evaluation form is flashed on your screens right now and is posted in the chat box and the comment section on Facebook. Only those who are able to submit the evaluation form will be given e-certificates of attendance for this session. Coming up next is a plenary session on competition, inclusion, and growth in the post-pandemic digital era, organized and sponsored by the Philippine Competition Commission. This session will begin at 11 a.m. in this same Zoom webinar room and will be streamed live on our Facebook page as well. Again, ladies and gentlemen, thank you very much and see you all in the next session.